Good morning, everyone. Welcome aboard. Happy Wednesday to you guys. Happy Hump Day, May 4th, 2011. Of course, one day away from Cinco de Mayo. Happy Cinco de Mayo to everybody out there celebrating tomorrow. Everyone's a little bit Mexican on Cinco de Mayo, as we all know. I will definitely be celebrating. But today was a Wednesday morning. So what happened today? Another great day here in the room, I must admit. I wasn't expecting to get two back-to-back big days like this. Another day, over 320 ticks today. Lots of fast track wins, lots of advanced course wins. We also, of course, had some auto trader wins today as well. Everybody doing really well the month of May, right? We knew it was going to happen. We knew eventually they were going to turn the corner there, and eventually they were going to find the confidence they needed to get that big money back in the market. Boy, I feel bad anyone who bought the highs on gold last week, that's for sure, because gold tumbled today, crude tumbled today, and it really had a lot of that look to it early this morning, didn't it? Now, let's see here. Wednesday morning, Wednesdays are always the same. We got inventories at 10:30, so crude oil's always on our minds. We also do members trainings on Wednesdays, so Wednesdays always have this type of feel to them. Wednesday, crude oil inventories, that means, well, a couple things. First of all, we know we're probably going to get some moves on crude today, but we don't know when. It might be early, or it might be really late. And we tend to see three different personalities on crude, and we call them kind of phases. Now, this is just Wednesdays, or for the crude oil inventories, again, applies on Wednesdays. So there are three phases. There's the 8 o'clock till 10 o'clock. We look for trades on crude oil on Wednesdays from 8 o'clock till 10 o'clock. But then from 10 o'clock until about 10:35, 10:40, everything's going to be higher risk. That's going to be ahead of the news and then just a little bit after the news. We usually wait till about 10:45. We like to give it some time to play out. Oftentimes, the initial move after crude is the false move, right? It's usually jump up, then it tumbles. So we usually like to wait till after 10:35, after 10:40. We like to give us some time here to really see where the reaction is taking the market. And then from 10:45 until about 12:30-ish will be the third phase on crude. So we're typically going to look for for opportunities to trade on crude from 8 till 10. And then from 10:45 to about 12:30. We oftentimes see that end of the morning pretty good on crude. And it happens to kind of blend over into our members trainings, so we're able to kind of do that all together on Wednesdays. Now today, nothing on crude until 10 o'clock. And it was strange because we saw the same thing this week as we did last week. If you were with us last week, you saw this. What happened? Crude was sideways from 7:45 till 10 o'clock, nothing going on. My alarm goes off at 10 o'clock and we say, all right, no more trading crude from 10 o'clock till 10:35. And then today, same thing we saw last Wednesday, for some reason, that's what caused the bottom to fall out. And so we did the same thing we did today as we did last week. We said, well, we don't want to be trading right now. It's after 10 o'clock, but we dropped all the way to the low of day, all the way to the low of the wedge. And it was just too easy of a trade, so we ended up buying the lows here on crude, the first trade of the day at about 10:12. And my exact words were, as of 10:15, I cannot be trading this market. So fortunately, we got a trade on crude at 10:12, right? That big drop before the crude inventories. And again, we weren't expecting it, but we planned on buying the lows of the wedge to begin with, so we followed our plan. At 10 o'clock this morning, remember, I really wasn't planning on taking this trade. We break down, we get below the wedge. Now remember, at this point, I'm looking for either a long trade to go back up into the wedge, right, target up at the previous low of day, or I'm looking to sell a retracement and keep going. Now follow me down bottom here. What does that look like right there? Oversold. Now what does oversold tell me? It tells me don't go short. So that cancels out half of my opportunities here. Now I'm looking for a long trade. Momentum will always remind you what direction you should not trade. And since there's only two directions, I think you can figure out the opposite side of that coin. So here we are, we drop down, we go sideways. Momentum is oversold. So even though I want to sell here, I know it's higher risk. I now know oversold momentum, all I need now is some big buyers. And if you remember what we did this morning? We waited for it because we were nervous about the 10:30 news. So we waited, we saw buyers, 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 and eventually we broke above that swing high and we took the trade long. Now a good example here, gave you guys the exact entry and the target, right? Stop at 60. And that was a great example of where we had 80 overhead resistance, and we gave you guys 78 to make sure that you got that profit target filled. Everybody made money on that one for a fast track win. So we break below the lows of the wedge. Oversold momentum tells me, wait for big buyers. We got the big buyers. And again, we're thinking now, this thing's going to go all the way back up into the wedge, and I'm going right to the previous low of day. That would make perfect sense. Did it happen? Well, we got the +5, the +10, and then price came tumbling back down and made new lows again, -2 for my stop. So 18 ticks. I buy the wedge lows. I follow my plan of attack. That was our plan of attack. At 7:45 this morning, we said we're going to buy the lows of the wedge. That's exactly what we wanted to do. So we take 180 bucks out of there, and now here we are at our 10:30 news. Now what happened was very interesting here, because at 10:30 news, we got falling inventories, and you would expect that would of course result in higher prices. Was not the case. That really tells you what the market was thinking today, right? When you've got inventories come out lower than expected, that should result higher demand, rising prices. Didn't happen though. So it really showed you people were concerned about prices being too high. We didn't know why, but we kept seeing that come up in our tape. Right? I kept thinking it was Goldman Sachs telling everybody, sell your crude, sell your gold, they're going to be dropping. We had that happen 3 weeks ago. Major money managers issue statements to their clients saying, hey, by the way, be careful about rising commodity prices, they're probably going to tumble, right? That was what they said 2 weeks ago. Look, 2 weeks ago what happened, right? Swatted down. So we thought that might be the case this morning. We really don't care though, to be honest with you. I really don't care why. But what we did though was we read tape, and the speed was very inconsistent here this morning after 10:35. So we waited. While we waited, we formulated our plan of attack. And we said, all right, we get a sideways range here, so let's use this range first. Since we had inconsistent speed, that tells me we're probably not going to get the big breakouts right now. Okay, might happen, but we're going to want to see confirmation first on that. So of course, the sideways range, now here would be a two-step pattern long, right? But again, we just didn't have much room. Not much consistent speed here. So we waited. But if you're looking at that going, why didn't you buy those lows, Joe? It's because we didn't get what we needed. The rules did not line up. Okay, and thank gosh we didn't, because it stopped you out, right, and then kept going. Now remember, at this point, we've got that sideways range. I want to sell these highs.